Hello, and welcome to this week's episode of Tackling Your Taxes series, Claiming a Dependent on Your Federal Tax Return and State Tax Return. My name is Aisha Servati. I'm the director of the Low Income Taxpayer Clinic at Mid-Minnesota Legal Aid, where we assist individuals who have IRS tax disputes. So looking at an overview of this week's episode, we're going to be talking about who is a dependent, what is a qualifying child, and what is a qualifying relative, which are specifically defined terms by the Internal Revenue Service, who can claim a dependent, some dependent credits both on federal and state level, and then some helpful resources. So looking first at who is a dependent. So dependent is defined as a person who's cared for and provided income during the tax year. So generally, a dependent will fall into two different camps, a qualifying child or a qualifying relative. And I'll talk about each one of those tests and what specifically they mean and what credits you can take advantage of. But for example, if you want to take advantage of the earned income tax credit, then the dependent must be your qualifying child. If you're looking at a qualifying relative, then you might be eligible for the credit for other dependents. So looking at a qualifying child first, which is the most popular test when you're claiming a dependent on your tax return, the qualifying child must have a valid Social Security number and must meet 4 different tests, which is age, relationship, residency, and income and joint return. Something to note is that one's child cannot be claimed by more than one person in the same tax year. And so we'll talk more about as well about who is eligible to claim the dependent if more than one person is trying to claim the child. So looking at those tests for qualifying child, first you have age. So any age if permanently and totally disabled at any time during the tax year, under age 19 and younger than you for specific credits. There are also other credits that allow you to claim a child if they're under 24 at the end of the tax year and a full-time student for at least 5 months. Something to know is that full-time is determined by the school as what is full-time attendance. And then when you're looking at schools, you're looking at elementary school, junior, senior high, college, university, or technical, trade, or mechanical schools, but on-the-job training courses and correspondence schools and courses that are normally offered through the internet are not considered school for full-time attendance for that under age 24 age requirement. There's also the relationship test, which is that they are your child, stepchild, foster child, a sibling, half-sibling, or step-sibling, or descendant of any of those, such as your grandchild or niece or nephew. And then you're looking at residency. So the child must live in the same home as you in the United States for more than half of the tax year. So that's 6 months in 1 day or more out of the tax year. And then you want to finally show that the child themselves did not provide more than 50% of their own support and that they are not filing a joint return with another person to claim credits such as the earned income tax credit. A qualifying relative is then someone who is not your qualifying child, and then they may be related to you or not related to you, but lived with you the entire tax year as a member of your household. They had a gross income of less than $4,700, and you provided more than half of their support for the tax year. So if someone doesn't meet those 4 tests for qualifying child, they may instead be your qualifying relative, and you'll be able to claim them, for example, the credit for other dependents. So when you're claiming a dependent, you want to be prepared to provide the IRS with documentation, establishing those 4 tests, relationships, residency, support, and then also your priority, which I'll talk about in a moment, for purposes of any credit. So depending on the age of the child, you might have school records. If no school records, you might have medical records, leases, and then the adjusted gross income of anyone claiming the child, as well as the child's parents. And one thing to know is that you want to make sure that the documents are dated for the tax year that you are claiming the dependent. So if you get a letter for this school year for last tax year, you want to make sure that they mention that the student, the qualifying child, was living with you for the 2023 year, even if the letter is dated in 2024. It can't just say that they currently reside with you. And improperly claiming a dependent can result in the loss of the right to claim certain credits in the future, having to repay a refund, or paying additional taxes and penalties and interest. So what happens if a child meets the test of a qualifying child of more than one person? Only one person can officially treat the child as a qualifying child and receive those tax benefits. You cannot agree to divide the tax benefits between two people who wish to claim the same child. You can be claiming different children. It's just when it comes to the same child, only one person can claim that child. And so there is some tiebreaker rules. And this outlines what those are. And so if the parents are filing a joint return, then the parents are claiming the child. If only one person is the child's parent, then they are the qualifying child of the parent. If the two people who are claiming the child are the child's parents and they're not filing jointly, then is the parent with whom the child lived the longest during the tax year. And then if the child lived the same amount of time with each parent during the tax year and they're not filing a joint return, then it is the parent with the highest adjusted gross income. And then if no parent is claiming the child, then it is the person with the highest adjusted gross income, or a person with a higher adjusted gross income than any parent who can claim the child but is choosing not to claim the child. There are times when a non-custodial parent can claim a child. So the custodial parent, who's the parent that the child primarily resides with, can release or revoke their claim so that the non-custodial parent can claim the child. That's an IRS Form 8332. And both the custodial parent needs to fill out the form and then sign it. And then the non-custodial parent files that form with their tax return. And so that allows the non-custodial parent to claim the child for purposes of the child tax credit, as well as any exemptions, which are available on a state level, but not currently at a federal level through 2025 to the Tax Cuts and Jobs Act. And so one thing to know is that even if this form is signed, the non-custodial parent may not claim the child for purposes of head of household filing status, earned income tax credit, or the child independent care credit. So it is only the child tax credit and then any related exemptions for that form. And one thing also to note is that the IRS does not have to abide by any divorce decrees or parenting time arrangements or agreements or support. They go by their definitions of what's a qualifying child and whether that child is residing with the custodial parent or the parent who's claiming the child, or if one of those tiebreaker rules applies. And so now I'm just going to mention the three most popular federal dependent tax credits. That's the earned income tax credit, which is a refundable credit that you must have earned income for, at least $1 of earned income. Earned income is wages from employment or 1099 income. It is not any public benefits that you might receive or Social Security benefits. Both the taxpayer and the child must have a Social Security number, and the maximum amount of the credit for this year is $7,430. The amount of the credit you received is based on your earned income and number of children that you're claiming. So then there's the child tax credit and additional child tax credit. And those are partially refundable credits. You must have at least $2,500 of earned income. The child must be 16 years old and younger. The child must have a social security number, but the taxpayer may have a social security number or an individual tax identification number or ITIN number. The maximum refundable credit is $1,600 per child for this year. And then there's the credit for other dependents, which is a non-refundable credit. So the difference between refundable and non-refundable is that with refundable, if let's say you have a tax liability of $500 and your credit amount is a $1,600, you would be refunded $1,100. Non-refundable means that it just brings your tax liability to zero, but you don't receive any of that additional credit amount refunded back to you. So for the credit for other dependents, those you can claim for dependents who do not meet the child tax credit tests. And both the dependent and the taxpayer may have a social security number or an ITIN, and the maximum amount of the credit is $500 per dependent. Then I just want to note the new Minnesota dependent tax credits. These have been changed. The working family credit has been modified to go along with the new child tax credit and the credit for qualifying older children. For the working family credit, it is a refundable credit. You must have earned income in up to $350 of a credit is available based on your earnings. For the child tax credit, which is a very important new credit, it is refundable credit. There is no earned income requirement. The child must be 17 years old and younger, so it is different than the federal one, which is 16 years old and younger. Both the child and taxpayer may have a social security number or ITIN. The maximum amount of the credit is $1,750 per child, and there is no limit on the number of children. So without having an earned income requirement, that means someone who may just be receiving, for example, Social Security income or public benefits would be eligible for the child tax credit in Minnesota. What they would want to do is make sure they file a Minnesota state tax return and claim the child tax credit on there. There's also the credit for qualifying older children, which is a refundable credit. It's for qualifying children over 17 years old. So children who are 18 years old and those who are under 24 and are full-time students, as we talked about previously. Both the dependent and the taxpayer may have a social security number or an ITIN number. The maximum amount of the credit is $925 for one older child, $2,100 for two older children, and up to $2,500 for three or more older children. So there is a limit on the number of children for the credit for qualifying older children. But again, there is no limit on the child tax credit itself if you have children who are 17 years old and younger. So I just want to note some helpful resources. United Way 211 has available help in a variety of areas, not just tax. So they're available by calling 211 or 1-800-543-7709 or texting your zip code to 898-211-STAR. Then there are some information from the IRS website if you are claiming a dependent. You can look up the different tests, and there's also an interactive tax assistance, which helps you determine who may claim a dependent. There's also that IRS Form 8332 that allows you to release or revoke your claim to a child as a custodial parent. And then if you have a specific tax question about your specific situation, you can call MMLA's intake and they'll ask you some questions, see if it's an issue that we can assist with, and then forward on your case to me. You can call our intake at 612-334-5970 or 1-800-292-4150. I will say that at the Low Income Taxpayer Clinic, we are statewide for the entire state of Minnesota, and we do have some requirements for income eligibility if you're 250% or less of the federal poverty guidelines for representation, but we can talk to you and provide advice regardless of income. So if you have any questions about whether or not someone qualifies for a dependent, or if you did claim someone as a dependent and now the IRS is examining you and asking for additional information and documentation, then you can contact us and we're available to assist. So thank you for coming to this episode of Tackling Your Taxes. And the next episode, which will be in 2 weeks, we will talk about what to do if you have an unclaimed economic impact payment or stimulus payment. Have a great day.